Today we have a little update. Q2 earnings just released. Lemonade Insurance, LMND, $48.98. Where do I even start? If you haven't seen the first video, we made this video May 15th, 2025. We're starting to see some movement. Definitely put this on your watch list. It's going to be a good one long term. But check out this video first. It has a full fundamental analysis of this company. This video is just going to be a little update on the Q2 earnings that just released. All right, so we are currently sitting at $3.6 billion, which is still a small company. Year to date, this thing is up over 34%. So we're starting to see a little movement in this stock. Huge improvements in their Q2 earnings. But she's moving. Starting off with total revenue, earnings per share, latest total revenue coming in at $164 million, 34% year over year. And earnings per share coming in at negative 60 cents, up 25% year over year. Where we're going to see some of the biggest improvements is the statement of cash flows. When we take a look at free cash flow per share and cash flow from operations, huge improvements, over 100% year over year improvements. Cash flow from operations posting $5.5 million, up 147% year over year. That's some huge improvements. And also free cash flow per share posting 0.05, coming in at 126% year over year growth. And lastly, when you come down to net income, guys, they are still posting negative net income, negative $43.9 million, but it is up 23% year over year. Now, some of you might be asking, why is this stock price moving? They're still not profitable. I mean, the bottom line still isn't profitable. Why is this stock going up? Well, one of the biggest reasons is because we have an outdated accounting system. And the big reason is because of total operating expenses. Since we are currently living in the network-defined economy, most of these companies are deploying a ton of money in operating expenses, specifically in sales and marketing and research and development, to grow their future earnings. This is all anchored in sound business logic, but it has an effect in depressing their current earnings. That is why Lemonade Insurance is still posting negative earnings. And so in this day and age, it is currently obvious that tech companies' current income statement is an unreliable measure of its long-term ability to generate cash flow. And so other things that you really want to look at are their main KPIs, which we'll pull up right now. These are some of the main KPIs down here that you want to be looking at specifically for Lemonade Insurance. And the top three are in-force premiums, premiums per customer, and total customer growth. All right. And as you can see on their shareholder letter, it is the first thing that they kind of post. The key performance indicators for Lemonade Insurance, they have it on their first page. Just as long as these KPIs keep on improving, the company will be fine in the long run. Okay, so number one, in-force premiums. They posted $1 billion in in-force premiums. In-force premiums is up 19% year over year. And as you can see, in-force premiums is one of the most important KPIs because it will grow the business and scale their operations. So from Q3 of 2023, the in-force premiums have been going up every quarter. 7 quarters of in-force premiums growth acceleration. Just look at that growth, guys. 29%. 29% in in-force premiums. That growth rate is insane. Next up, we have premiums per customers. They posted $402 per customer. That is up versus $387 from Q2 2024. That is up about 4% year over year. Now with the in-force premiums and the premiums per customer, that is why we saw some growth in the top line total revenue. Top line total revenue will be driven by an increase in the gross premiums earned. And in the transcript, they also said revenue from their investment income has grown 16% year over year. All right. Lastly, guys, customer growth has also been growing. They have 2.7 million customers now on the Lemonade Insurance plan, up 24% year over year. So as you can see, for the past 2 to 3 years, their main KPIs, in-force premiums, premiums per customer, total customers, has been growing for the past 2 to 3 years consecutively. Lastly, of course, gross loss ratio has been declining. This quarter, they posted 67%. We're seeing some of the best results they have posted on their gross loss ratio. And of course, cash flow. They generated $25 million in adjusted free cash flow, an increase of $23 million relative to the prior year. This $25 million in adjusted free cash flow is a 10x increase versus Q2 2024. This company is starting to pick up. It's starting to ramp up. At a $3.6 billion valuation, I still think it's pretty undervalued. And remember, guys, they are also jumping in a new category, car insurance. Geographic expansion has been another growth tailwind. They started in Colorado. This is going to be a great tailwind for them. And of course, they are highlighting Lemonade Insurance in Europe They are only in Germany, France, the UK, and Netherlands, serving over 250,000 renters and homeowners insurance. And so quarter two for Lemonade Insurance was one of the good quarters. We are starting to see a turnaround in this company. When you take a look at the stock price, it's pretty much been flat since 2022. It's just been hovering around the $20, $30 range. Don't forget to watch this video first before you watch this one. It has a more full, in-depth fundamental analysis that I did. But other than that, Lemonade Insurance is looking good. Great improvements. This is still a pretty small company, so they do have a lot of room to grow. Let me know what you guys think about this company. Thanks for watching this video. Don't forget to subscribe, and we will see you on the next one.